I'm Matt Bishar with NAREITWeek here in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me today is John Kessler, President of Empire State Realty Trust. John, thanks so much for joining us today.
Thanks for having me.
Now, Empire State Realty Trust portfolio is currently about 95% leased. What does the company consider to be its sweet spot in terms of lease rates?
Well, technically our occupancy is actually about 90% today, and we're competing in what we really think of as a value price point in the market. Our leases were typically doing deals in the, call it high, around $59, $60 up to the low 70s per square foot. And if you compare that to alternatives in the market, say where the new construction is being priced, you're going to pay significantly more than that, call it $85, $90 or more dollars, or greater than $100 per square foot. And conversely, if you go to a lesser quality product to pay a little bit less, you're going to drop a lot in terms of quality. And what we really offer for those lease rates from a value perspective is great central locations. We really take care of our buildings, fully, very well maintained, redone our lobbies and our elevators, and really focus on delivering service to our tenants. And then this very central locations, convenient to mass transit, the major subway trains, and the major points of commuter access to New York, Penn Station, Grand Central. So given all that and the, sort of the value that we're offering, we feel very good about our, where we compete in the marketplace.
And your company reported year-over-year FFO growth in the first quarter. What drove those results, and do you expect those trends to hold up for the rest of the year?
Well, look, we're in the office business, and so it's all about leasing. And in the first quarter, we were very pleased to announce that we leased over 250,000 square feet, which is a very strong number. So that clearly was a driver of our results. We also were very fortunate to have a very good quarter with our Observatory business, which was up 16% versus the same quarter last year. Now, importantly, and as we've said in our disclosure, we had the Easter holiday fell in the first quarter this year, and we also benefited from very good weather on a relative basis versus the prior year, and those factors certainly impact the Observatory results. But overall, first quarter very strong for us, and feel good about that.
So with the positive fundamentals, what are some of the challenges or the biggest challenge that you see for the company for the rest of this year?
Well, look, I think the big challenge for us is really that we just want to continue to focus on execution of our plan, staying focused on redevelopment of our assets and marking our spaces to market. Today, our trailing 12 months net operating income in our portfolio is about $335 million, and between executing on signed leases not commenced and marking to market our office spaces, marking to market our retail spaces as leases roll, and leasing up our vacancy, we think we can generate more than $100 million of incremental NOI growth against that base. And so I think for us, the opportunity is really just to make sure we continue to execute, and that means being out there aggressively on the leasing front, and then making sure we accurately and properly do all the work we need to do on the capital side in terms of improvements to the tenant spaces, et cetera. It's really about execution.
John, thank you so much for joining us.
Thank you for having me.
For more from REITweek 2016, be sure to visit REIT.com.